Good morning, everyone, and happy Tuesday. It is Julie here with your TipRanks pre-market morning update, giving you everything you need to know before the market opens. I am here Monday through Friday with videos out before the opening bell, so make sure that you're subscribed to the channel and turn on those notifications so you can stay up to date with all of our latest videos. This morning, we are taking a look at exciting stock market news, this morning's biggest gainers and losers, plus notable earnings reports. So here we go, starting off with stock market news. U.S. stock futures are a bit mixed this morning, with Dow futures being up 0.1%, S&P futures down about 0.1%, and NASDAQ futures down 0.6%. The shipping container that was blocking the Suez Canal has now been moved, and the Suez Canal has been reopened. Now, there are hundreds of other ships waiting to cross through, and that backlog will take at least a few days to clear up. What's yet to be seen is the financial impact of all of these shipping delays. Telecommunications conglomerate Comcast Corporation announced that users of its set-top platforms will soon have access to Disney Plus and ESPN Plus streaming services. Comcast said that it is rolling out Disney Plus on Xfinity, which includes X1 cable TV and Flex broadband streaming platforms. With this, Xfinity subscribers will have access to thousands of movies and shows ranging from Disney, Star Wars, Marvel, Pixar, and National Geographic. Additionally, the company revealed that it is launching ESPN Plus on its Flex platform and plans to introduce it on X1 in coming weeks. This will provide users access to over 10,000 live sport events available on the ESPN streaming service. The Comcast stock does come in as a moderate buy with an average growth potential of 11%. Price targets reiterated within the last 2 weeks have been ranging between 12 to 23% potential upside. The latest to announce a share repurchase program is Tencent Music Entertainment. They announced a share buyback program of up to $1 billion that they intend to fund from their current cash balance. The repurchase of the shares commenced on March 29th and will be completed over the next 12 months. Tencent's chairman of the board said that the share repurchase program is a strong indication of the board's confidence in the company's business outlook and long-term strategy. We believe it will ultimately benefit the TME stock and create value for its shareholders. The Tencent Music Entertainment Group stock does come in as a moderate buy, with an upside potential of about 48% according to analysts. Most recent price targets within the last week are between 24% all the way up to 84% growth. In other stock repurchase news, we have Palomar. The life insurance company announced a stock repurchase program of up to $40 million, which it intends to fund from its current cash balance. Their repurchase program will commence on March 31st and will be completed over the next 2 years. The Palomar CEO said that we remain very confident that our 2021 premium growth rate will be at a level similar to that of 2020, as well as in our ability to achieve the previously announced adjusted net income guidance of $62 to $67 million for the calendar year of 2021. The Palomar holding stock has cooled off a lot since February, but does currently come in as a strong buy with an average upside potential of about 54%. The most recent rating, coming 4 days ago, had a 42% potential upside. Hearing from engineering services company NVEE Global, they have acquired Geodynamics, a provider of sonar-based deep water geospatial solutions, in a cash and stock deal with $42 million. North Carolina-based Geodynamics will operate within NVEE's geospatial vertical, which will add full ocean depth hydrographic and geophysical surveying to the company's topographic and nearshore geospatial capabilities. With this acquisition, NVEE is hoping to expand their geospatial marine solution strategy and create a competitive edge in multi-solution hydrographic surveying projects. The deal will be immediately accretive to NVEE's earnings. NVEE Holdings comes in as a strong buy with an average price target of $126. Most recent price target was reiterated yesterday for a 42% potential gain. And we also have Fly Leasing Limited, whose shares jumped after the aircraft leasing investment company inked a deal with Carlyle Aviation Partners to be acquired for an enterprise value of $2.36 billion. Fly Leasing CEO said that this transaction represents strong value for Fly shareholders at a time when airlines are facing an extremely difficult environment and smaller aircraft lessors are disadvantaged in the debt markets. Carlyle Aviation Partners, which is the commercial aviation investment and servicing arm of the Carlyle Group, manages a leasing portfolio with 246 aircraft owned. Notably, Fly Leasing's portfolio of 84 aircraft will be added to this. The transaction is expected to close in the third quarter of this year. Fly Leasing comes in as a moderate buy, and after yesterday's jump of 27%, the current price target does represent a 23% downside. The Carlyle Group comes in as a moderate buy with a 10% potential upside. Now let's take a look at this morning's biggest gainers and losers. Starting off with Colorstar Technologies, who's also our most actively traded after announcing they are developing an NFT for their entertainment business. Under the ticker CSCW, the shares are currently up nearly 65% in the pre-market. We also have Vertra Incorporated under VTSI, currently up 70%, and Performant Financial under PFMT, currently up 24% in the pre-market. Now taking a look at this morning's biggest losers this far, we have Aero Century under ACY, currently down 34%. Wave Life Sciences under WVE, currently down about 24%, and Sea Change International under SEAC. They're currently down nearly 15%, but this is following a gain of over 100% yesterday. Now moving over to notable earnings reports. And with a recent earnings report, we have EV company Canoo, whose shares have actually fallen a bit despite the electric vehicle manufacturer reporting better than expected fourth quarter bottom line results. Canoo's fourth quarter loss of 8 cents per share improved from the year-ago period's loss of 57 cents per share. Furthermore, it compared favorably to analyst expectations of a loss of 14 cents per share. However, an adjusted EBITDA loss of $42.5 million was wider than the year-ago period loss of $35.3 million. Under the ticker GOEV, the Canoo stock does not have many recent analyst ratings. The most recent comes from 19 days ago with a $23 price target, a price that the Canoo stock was actually close to back in December. This would be about an 84% potential upside from the current price. This morning, we also heard from BioNTech, who is up over 6% in the pre-market after some positive results. Their total revenue for 2020 has risen about 344% year over year to 482.3 million euros, driven by commercial revenue at over 303 million euros, which has increased over 12 times from the previous year. Recording earnings of about 15.2 million euros, the company has swung back to profits in 2020 after a loss in 2019. As of March 23rd, the vaccine deliveries stood at 200 million doses, with signed orders for 2021 reaching 1.4 billion doses. Right now, the BioNTech stock does come in as a moderate buy with an upside potential of about 20%. However, we haven't seen any reiterated targets for the last 3 weeks. For earnings reports in the after hours today, we're expecting to hear from Chewy, Lululemon Athletica, and BlackBerry Limited. So that is Tuesday's pre-market morning update, getting you up to date with everything you need to know before the market opens. Now, if you enjoyed today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Don't forget that I am here Monday through Friday with these updates, so make sure that you're subscribed to the channel. Thank you guys so much for watching, and we will see you back here next time.